Gold has historically been a store of value. I think what's interesting is where do we see the gold demand coming from?
In the first quarter of 2025, gold flew past $3,100 per ounce before a small correction after the so-called Liberation Day. And this marking one of the strongest quarters for the precious metal since 1986. Now, what does this mean for Bitcoin? Many critics would say it's over for the only functional, decentralized, non-government monetary network in the world. You really think that? I got some bad news for you. It's Sir Ulrich, and are you down with the underground? So investors are piling into gold. Really? Look, I don't work for any wealth management office. I don't shill financial products. I'm not some Ivy League macro guy. It's just, to me, investing in gold is like saying, I don't really believe in the rest of my stocks and bonds that I still own. So I'm just going to give the London bullion market some transaction fees because I like the edgy narrative. I mean, am I right? Look, you watching, you don't own any significant amount of gold, and I don't own any gold. But who has the gold?
Gold has historically been a store of value. I think what's interesting is where do we see the gold demand coming from? A huge amount is from China.
Yes.
Really? You really think that?
Where, as I said, they're in the middle of an economic recession/depression. People don't trust the Chinese currency because they have capital controls. There are 1.4 billion Chinese who all want to get their money out, and they won't let them. They will let them buy gold.
Who has the gold? Who has it? Well, it's the central banks. You know, the big investors piling into gold, that's what they said. It's kind of anticlimactic. There isn't a massive wave of gold adoption. Millennials aren't taking up the mantle of defending gold as a legitimate store of value either. Central banks worldwide are stockpiling the asset, but this ain't anything new, with purchases exceeding 1,000 tons in the last 3 years, according to the World Gold Council. In 2024, central banks bought a net total of 1045 metric tons, and this follows 1082 in 2022 and 1037 in 2023. For reference, this is more than double of the purchase trends from 2010 to 2021. Central banks purchased 21.5% of all gold mined in that time frame, and central banks purchased 29% of all gold mined from 2022 to 2024. That's a 38% increase in their participation in the market. And more facts, in 2024, countries were going wild with these purchases. Poland, 90 tons. India, 37 tons or more, Turkey, 45 tons, Uzbekistan, 11 tons. Even China's buying 5 tons every month since November. Look, it's not hard to see that gold is going through the use case that so many alleged Bitcoiners actually wanted. They wanted central banks to buy Bitcoin from you, to pump your fiat bags. But I'm confused, why would you want that? And I don't say that because I'm some weirdo that thinks it's immoral for governments to act in the free market. Let them buy open source money. I don't care. But, I'm genuinely confused. Of all the groups to acquire Bitcoin, this cadre of central banks is more centralized and has less functional use for Bitcoin than any other group you can think of. And look, we pretty much know central banks do 4 things. They buy and sell government bonds. They set benchmark interest rates. They control bank reserve requirements, and they lend to other banks. And these functions have nothing to do with Bitcoin. So if there's anyone that definitely does not need or have a use case for Bitcoin, it's the people who create money out of thin air. In fact, Bitcoin's existence puts into question the legitimacy of government bonds in the first place. What's a better source of reliable value preservation? A decentralized hard money that no one can control, or the promise of a self-serving parasitic government? And if perchance Bitcoin wins that comparison, what use is an arbitrary fixed lending interest rate not determined by the free market? That goes away. And then there's the facade of reserve requirements. What exactly are banks lending if it isn't money? It's a line of credit, make-believe. They have the power to decide who gets to spend money and who doesn't. Now that doesn't seem right, and Bitcoin can only have one claimant to a unit at a time. And by the way, that really is what makes companies like MicroStrategy so backwards. Just whose Bitcoin is it? It can't be everyone's. And let's be honest, people, banks, we're all scared of a potential recession. But recessions, these boom bust cycles happen because claims on the same money are too quickly unraveled, or that the distrust in major actors' ability to pay their debts quickly outgrow the size of the debt they hold. And we can thank banks for this, who have overstepped their role as economic conduits to exist as economic dictators. In this time of unpredictability in fiscal and trade policy, banks are running to gold because that's what they're familiar with. But Bitcoin is a better system, a better solution for regular people. The alchemy we know as financial engineering that's slicing up people's 401ks as we speak does not mix well with the Bitcoin formula. However, if you put Bitcoin behind the closed doors of the rapidly evolving crypto banks, you will just get more of the same fiat thievery that put our society right where we are in the first place. So yeah, central banks are in competition with Bitcoin. And let me repeat, they do not mix no matter what LinkedIn finance sales bro tells you. It's a very inconvenient new economic force that they just haven't figured out yet. And they hope you ignore it so they can ignore it as well. Now, but wait. They're buying gold, right? Bitcoin's supposed to be gold 2.0. That's what Michael Saylor told you. Or exponential gold a la Fidelity's Jury and Timmer. What gives? Now, I don't want you to think that I disrespect people who've spent thousands of hours understanding economic forces. Mike Jurian, thanks for your Bitcoin love. Keep stacking. And don't forget to run a node to verify your transactions. Let's catch an NBA playoff game, huh? But, you know, the narratives that they tell you have intent behind them. Michael Saylor doesn't want you to spend your Bitcoin. Jury and Timmer doesn't want you to spend your Bitcoin. And they learned what Bitcoin is and are hoping you listen to them more than you do your own objective research. And this is the problem with plebs, with the working class, midwits, and any combination of these demographics. Just because of the limited time and or intellectual capacity, these people outsource their understandings, even their worldviews, to align with people who would manipulate or steal from them. Now let's make one thing clear. The very nature of gold makes it the perfect safe harbor for massive institutions that still want the fiat experiment to persist. Gold isn't killing fiat. Gold actually empowers fiat. All these central banks exchanging billions of US dollars or euros for gold. Let me ask you, the audience, what's the intent of this action in your opinion? Is the ECB going to save all this gold to send their babies to college in the future? They don't need to do that. They have the Cantillon effect for that. No. They're just going to wait for this current thing, this economic uncertainty, to fizzle away, and for tariffs to establish their economic vector, which it will soon, and then dump on the gold bugs and whomever else they scam to buy gold this past quarter. The fact that gold has risen while it's common knowledge that central banks are the primary buyers is the definition of a bubble. One group of people that think and act in a homogenous way. Real adoption comes from a bunch of random people, random groups with random incentives acquiring the same thing. This means that when one group gets impacted for whatever reason, the market for that item doesn't die. That sounds like Bitcoin to me. What do you think? Now let's just say central banks bought Bitcoin instead of gold for this period of uncertainty, as we're calling it. Okay, well, let's talk about it in other terms. Let's use an analogy. Sir, I just want to say I'm dating your daughter because I'm in a period of emotional uncertainty. Or hey, how about this? I'm hiring you to work at this company because, well, we're in sort of an uncertain phase at the moment. Is that the vibe you looking for? Central banks don't want the gold, bro. They feel they have to for a moment. And the minute that feeling eases, they will go back to their allocation that they feel gives them a sense of control again, meaning an ever-expanding basket of fiat currencies. And a side note here as well, I don't want to ignore that because there's been a multi-decade record in gold spot price volatility, it's going to attract dynamic investors more so than ever before. And this means the same thing that's plagued Bitcoin its entire existence, the traders, the YOLO leverage, gold's going to get a taste of it. But hey, I'm all here for the naked short selling of gold ETFs. I don't think the gold industry realizes what it's in for. Well, maybe it does. They're the professionals, right? But do you think it's good to be a miner right now? You know how many people want them to reduce production to keep the pump going? No wonder it can never rally. The more they mine, the more they dilute the supply. So that means the supply could be artificially suppressed by decreased mining operations, which means miners control the price from a certain point of view. And that means a strong mining industry feeds a weak spot price, and all the gold salesmen reek of used car guy with websites that are just as creepy. And if gold is so valuable, why are they selling it for dollars? Oh, maybe because of the insane premiums they charge for physical gold on both sides of the market. Yeah, I'd sell my Bitcoin for a 5% premium and just buy it back whenever I think I want after I grift on both sides. Look, I think it's important to remember that everyone isn't buying gold. It's just central banks. Imagine when they all pivot because the jobs report is strong and the Fed has reached their goals for curbing inflation. But hey, I have this metal bar that I can sell back to the same sketchy website and they only take 10% from me, minimum. I'd feel rugged if I were you. Man, gold has predatory exchanges, an inversely incentivized mining industry, and an unreliable and stagnant market base. It's a good thing I got Bitcoin. All real Bitcoin exchanges enable you to self-custody immediately, and if you're not being an idiot, that's the first thing you're doing when you get a decent-sized UTXO. And any changes in the mining industry does not impact the supply. Bitcoin issuance was predetermined. Miners can opt in if they want a piece of it. And as for the people buying Bitcoin, yeah, it's definitely a bunch of traders, but we're used to that. It's also regular people. It's farmers, engineers, stay-at-home mothers, doctors, artists, small business owners. And they all say, look, I don't have time nor the insider secrets to play financial games with your failing, crooked fiat system. So I'm going to buy Bitcoin and use Bitcoin and watch you all panic. You can either join me now voluntarily or later when you have no other choice. So where does that put the gold price in? Where is gold going? Well, it's going down,